Good morning, traders. Welcome to the TMT Stock Market Strategy video for Tuesday, October 25th. All right, so we had Merger Monday happening, and sure enough, great excuse to buy the market up yet again. Markets will not go down, guys. Mark my words, until this election is over, and even maybe after the election. We're coming into the end of the month, which is window dressing for the mutual funds. Inflows coming in as well for the mutual funds. So if you're short, be careful. I just don't think it's going to happen until the powers of be want it to happen. And I think as we get closer to the election, you might be able to get a little bit of a sell-off. But again, the Hillary Clinton presidential bid is probably bid already into the market. And that's pretty much it. I mean, we'll see what happens. But we have a fully valued market, and markets just continue to go up and defy gravity. So let's see what we have and see what can be the culprit here, which I think is going to be the dollar. China is going to be another issue. But if we continue to get really some good strength in the dollar, and in front of you is going to be the weekly UUP, which is the dollar ETF. You can see here we have a massive bull flag, and we're at the upper end of the range already. And I'll show this to you on a daily chart, and I've showed this to you before. We take this other swing high out, which let me get right to it. Which is right here. If we take that swing high out, you'll be looking at the dollar really starting to take off, and that's going to put a lot of pressure on the commodity sector as well as equities. And the multinationals going to have a tough time with their currency fix, so you got to be careful with that. And why? Nobody cares right now. You can see bad news is good news, good news is good news. So whatever chance you get to buy the market on any dip, that's what they're doing until it hurts. Once it starts to hurt, and what I mean by that is when markets pull back and they don't bounce, that's going to happen. You have a fully one-sided market. It's totally bull. It's a bullish market, and you have volatility collapsing, which there's no fear, and that's going to be really what's going to happen. I mean, you pay attention to the VIX, got to pay attention to transports. I go through it all day in and day out. So daily chart UUP, here we go. Keep an eye on this. Now, it's due for a pullback, and we did get a little bit of consolidation here, and we popped for the last couple of days. And you can consolidate at the upper end of the range. We have gap area of support, which should be filled, and probably will be filled at one time or another. But if we can get back above this, keep an eye on gold and keep an eye on crude oil, to be exact. If that crude oil is going to, heavily weighted on, as you know, the U.S. dollar, crude oil all over the world is weighted on U.S. dollars, so that's going to hit home when the dollar really starts to start hurting some of these exports. So keep an eye on the dollar. Let's take a look and see what else we have. We have the GDX. GDX didn't do too well today. We had a little bit of a push lower. And again, guys, I think GDX and GLD, the gold miners and gold itself is in a bottoming process. But you have to be patient, because what happens in gold, as you know, for those of you who follow gold, they like to flush all the weak hands out. They did it here, and I think there's going to be one more flush. And I'll tell you why. If you look at the GLD, which is the gold tracking ETF for gold, I think you get back into the 115, 117 area. If that happens, you'll hit that one corner, that upper end here of these trend line areas, and once that happens, it should fail one more time, and then that would give us a cue to start looking for a base building to buy GLD. Okay, I'm not looking to buy GLD right now. If anything, I would like to short scalp GLD, GDX into support, and if we break support, one more quick flush, and then I'd start looking for buy points in GLD and GDX. Spiders, you can see here, we really have a one-sided market. Pretty much transports were weak, spiders were weak, and IWM really didn't do too much other than the NASDAQ, which was ripping. Money definitely flowing into technology. We have Apple today, Amazon this week as well. So be interesting to see Google again. So we'll see what happens. But you can see here we have a doji. So we really haven't gone anywhere for the last 7-8 trading days. Probably about let's say 2, 4, 6, about 7 trading days. We really haven't gone anywhere. So this is what the market has given us, and unfortunately this is what we have to accept. So we had a range here, we dropped down, and we had a new range, we popped back up again, and now we're probably back into this range again. You can see here, this is what's happening. Range, and look, range for how many weeks and weeks on end. July and August were all range bound. So 4 months of range bound trading. really have. If you looked at the markets 4 months ago to now, you see where have we gone? Not much of anything. Look at the MACD RSI. Yes, looking good, constructive. As long as it stays above the trend line, maybe we can challenge the highs. But as of right now, I would use caution here in these markets because they're just totally inflated on this election. That's all it is. Transports really didn't do much here. You could see that. You could see how the MACD and RSI crossed over that signal line. And again, if you had any type of rally, look what's happening. Relative strength isn't what it's showing back here and back here when we had the last rally. Okay, so again, word of caution. IWM, same thing like the spiders, broke down from panda formation, and again, you could see here we're just making lower lows and lower highs. Nothing good about this chart at all whatsoever. 120 we need to lose, and then we could start looking for some downside targets. And last is going to be the Qs. Qs had the best out of all of the 5 indices that I just showed you, the 4, excuse me, Qs being the 5. And that's going to really, we're challenging the highs. We actually took out the highs. And it's just, I'm dumbfounded how people would just buy the Nasdaq at these levels. And again, nobody remembers what happened in 2000, and it's just when somebody says, "Oh, it's different," what's different about it? Amazon is, I don't even want to tell you how many times booked that is. It's just crazy how it just continues to go up, and all the other tech stocks. Now there are some good tech stocks out there like Adobe and Nvidia, great stocks, but again, overvalued. I mean, you want to wait for pullbacks and let it go. Don't chase, guys. That's the last thing you want to do, because any given day you're going to be down 20, 30 handles in the S&P, and that's going to be the top, and you're never going to see it again for a long time. So just use caution. I'm not trying to be the worry word here. Just saying, you know what? Valuations are through the roof. Nobody really cares. It's a totally one-sided market. As a contrarian, you have to be very careful. But in the meantime, if you're day trading, you want to stick to the trend, and the trend is obviously your friend. I know it's a cliche, but it is what it is, and see if you can buy dips. But a lot of traders that I talk to, buyers are getting stopped out, sellers are getting stopped out. So, take it for what it's worth right now. Use a little caution here going into November. I think after the elections, whether we gap up and go higher, great, but we got to move out of these ranges because it's just killing a lot of the trade that's out there, the high probability trade. Have a great day, guys. We'll see you tomorrow.